Yeah, guys, that's something that we don't think about. We're not being realistic with our approach to the markets, and hence you find that people are being sold dreams. It's being consistent is very possible, but in your consistency, know that losses are a part of the game. And also, the word consistency means that you have wins that surpass your losses. So even when you lose, you know that what you make is actually far more than what you lose. So that's why it's always important to know what you're risking, because if you risk what you're willing to lose, then you will not be stranded and find yourself in a position where you are losing a lot of money unwillingly. So I'm going to try and bring him back, but I wanna reprimand this. Josh Nairi is not a scam, and that's not a cool thing to say, man. He's not a scam. He's not a scam. I've known Josh since 2017, bruh, and he's not a scam. Trust me. So I won't allow you to say that on this live, man. I won't allow you to say that on this live. So yeah, I won't allow you to say that on this live, man. Mm, I might not become you exactly, but I'll surely reach my true potential with you as my inspiration. Salute. Away, Mr. TFX. Hey, the boy Scorpio, away. What you make is far more than what you make. What you make is far more than what you lose. That's the rule and the gist of the whole thing. So in my course, there's something that I was like busy with when I speak when I did the psychology videos. And one of the things I speak about there is risk management. To say that risk management is one thing that pushes people to make money. It's one of the things that really pushes people to move forward. So risk management is one of the most important things that people need to kind of implement in their trading, because that helps you not risk more than you are willing to lose. So if you're trading currencies, it's far more easier, even with NES and US 30. Let me break this down for you guys. Let me break down risk management and make it easy for you to understand um, the mindset of a winner and what it takes to basically get to a point where you are making far more money. My brother, Skosana Kaya Lake, my bro, Kaya, man, good to hear from you, man. It's been a minute. I hope you're good, and I hope things are well for you, man. So this is what I want to highlight for you: the mindset of a winner and how you can get to that level of being consistent in your gains and being consistent with your profits. The first and foremost thing is that I am still going to break down Euro USD, as I said before I end the live. I'll do a chart breakdown, but for now, I want to empower people's minds and feed your brain and your confidence and feed your psychology with these conversations that we're having. So one of the things that really make you consistent is the fact that you are not risking what you're willing to lose, and that's one thing that people miss. That people risk far more than they are willing to lose, and that kind of becomes the problem and the issue in your trading. So let's say you fund your account with $1,000. I'll use dollars because when I first learned this, I learned it in dollars, and then I'll break it down into rands, or depending on your understanding. If you're able to understand what I'm speaking about, then you'll know exactly what um, I'm talking about. So if you wow. So if the topic is still fresh, it's still fresh, Mandy. So if you wanna be a winner, you must think like a winner. Don't think like a loser, because losers want to make quick bucks. Losers want to make quick amounts. And if you're really gunning for quick amounts, that's when you really won't see profits and stuff. Like that's when you will be risking money you're not willing to lose, blowing more money than you're making, and get to a point where you don't really see your profits, because you will fund with 1,000 rands today and make 4,000. Tomorrow you come and you risk 5,000 and you lose the entire amount. and then you have to now refund back from your pocket. So let's speak about dollars and speak about currencies when you use this mindset. Because for me, I didn't see consistency from US 30 as I'm a US 30 trader now. I started trading US 30 now, and that's not where I found my consistency and where I got my trading edge and niche. I didn't start there. I started on I started on I started on currencies. So currencies are like the main thing that really helped me and pushed me to a point where I really saw that Forex really does work. I bought my first car with currencies, and that was like really, 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 really beautiful. So if you find $1,000 and then you're trading US 30, or you're trading Euro USD, let's use currencies, you're trading Euro USD. If you fund that $1,000, you need to come to terms with the fact that every trade you open is a risk. Remember that we're in the business of probabilities. So the market can either go your direction or not. The market can either hit your stop loss or your take profit, which is why when we send trades, we send take profit and we send stop loss. It's not just the TP we're sending, because in our minds, when we open the position, we know that the trade can either go towards our direction or go against us. So as you are opening the trade, you bear in mind and in your thoughts and in your heart, you keep this in your mind that the trade I'm opening can either make me money or take money from me. So when you open that trade, have that in your mind. That's the first step of being a winner, being able to accept the losses the market potentially has to give to you. If you can accept the fact that you will not always win, that's when you will start seeing consistent amounts in your trading, because it's not 100% gain. You can get to 80%, 85, 90, 95, but you'll never get to 100%. So in the percentages you're trading, you always have it in your mind that the market can either hit my stops or take profits. So you've got $1,000, you're opening a Euro USD trade, and your risk is about 20 pips. So when I was trading currencies, my risk would be 15 pips at most. That's the most I would risk on any trade. So I would risk 15 pips. Because of my entry method that I use till today, like on US 30. That's the same method I used on currencies. So I used to risk 15 pips. And if you open a 0.10 on $1,000 account, you're practically saying that if this trade hits my stop loss, I am willing to lose $15. As soon as you know how much you're willing to lose, then you can look at the profits to say, if I'm risking $15, how much is this trade giving me? If it's 100 pips, it's going to give you $100, meaning that for you to blow the account, you would have to take 100 trades, almost 100. So you need like about 70 trades before you can blow the account. Because obviously 15 times 100, that's 1,500. But like 15 times 70 or so, that should amount to 1,000. So you need 75 positions before you can blow that account. And what are the chances of you taking 75 positions and losing? If you lose 75 trades in a row, then you know that your strategy doesn't work. You have to go back, relearn the strategy, master the strategy, and polish and redefine your craft, because that means the strategy you have doesn't work. You cannot lose 75 trades in a row. It's impossible. Like, there's no ways you'll take 75 positions and lose 75 positions. So that's the first step of being consistent. Understand how much you're willing to lose, and an understanding how much you're willing to lose. The understanding of how much you are willing to lose will then bring you to the profits that you'll be making. For you to double the account, you need about how much? Like 10 trades. If you're targeting 100 pips, you need 10 trades to double the account. So on 10 trades, your account will be doubled, which is solid enough. If you double the account to 10 trades on currencies, that's beautiful. That's like the best mindset ever. That's the best approach ever. There's like, I cannot explain it more than this. So at 0.10 and 15 pips, you're risking 1,000. You're risking $15, which is around about 200 rands on a 15,000 rand account. That's like way little. You're risking like very small amounts to the account. So that's less than 10% of the account. that you're risking to make up 100, like 10%. You're risking 1.5% to make up 10% of the account. But obviously, if you want to risk more, then you can risk more. If you're using a standard lot on 15 pips, if it gets hit, you're risking 150. If it gets to 100 pips, you're making $1,000. So you can double your account with the first trade you take, but only risking 15% of the account, which is fair enough. You're risking 15 to make 100. That's fair enough. So that's the first thing that I did to my trading career that really helped me get my trading edge and get my niche and also get to the level of consistency. Understanding that I will lose some trades. It's not every trade that I will take that I will be able to win. So for the guys who are trading currencies, do look out for that and trade that that approach, trading that manner, trading that approach that when you're trading, you're risking a certain percentage in the initial deposit. If you're trading $100 account, risk is 0.01. 15 pips, you're risking $1.5. If it goes to your take profit, you're making $10 if it's 100 pips, which is good enough. You need 10 trades to make up that much to double the account or whatever. I don't know, you need like 100 trades to double the account, to 10 trades, yeah, to double the account. So these things are things that we never really think about, that when you're trading, you must know that you are going to lose at some point. So the currency wave has died out and people are trading US 30, are trading NAS 100. And how can we use the same mindset on trading US 30 and NAS 100? The same mindset and approach we use on currencies, how can we implement that on US 30 and NAS? For me personally, this is what I've found to have worked for me for the past 2 years or so trading indices. And on indices, obviously I started trading US 30 for I think it's been a year and like 4 or 5 months now on US 30 strictly. But on NAS 100 as well, I traded it. And obviously I used the same approach, but saw that it doesn't really work because a 0.01 on US 30 and you're risking 15 pips is not $15. That's like way more than you are risking with currencies. So I then changed my approach of how I trade US 30 and there. So on US 30, I know that I need to first master the structure and master the technicals for me to be able to trade it first. US 30 and Nasdaq are not for chancers. You cannot come on US 30 and NAS 100 chancing your technicals and thinking you're going to be learning how to analyze on US 30 and whatever. There's no ways you're going to be using US 30 and NAS 100 to polish up your technicals. There's no ways. This thing sometimes doesn't follow technicals, follows fundamentals, sometimes follows technicals strictly, sometimes technicals and fundamentals, whilst currencies are always purely technical at most times, and all fundamentals only what can I say? They supplement, not supplement, but they add on, they confirm the direction of your technicals that you have basically established as you are analyzing. So currencies are always good to help you know how to trade, and are always good to help you master your trading edge. So currencies are the best way to start off mastering your technicals. If you don't know how to technically analyze, go to currencies and master your technicals first before you can come onto US 30. Now, coming onto US 30, with me, I saw that I cannot fund money I'm not willing to lose. First of all, the whole amount I'm funding there is the whole amount I'm willing to lose, because those things don't play games. They don't play. So you cannot fund money you are not willing to lose, especially with how we trade these indices in South Africa, to be specific, because everyone in South Africa uses what we call barcoding, uses full margin trading. We use, scalping or whatever. I don't know what to call it, but we trade the same, like all of us. If I put in multiple positions at entry, someone else will be putting multiple positions, and people come and subscribe for signals, put in multiple positions below their accounts, and they blame us. And then they say, I lost my money for tuition, I lost my money for fees. Like today, I'm not even ashamed to say this, that today I sent 2 trades in the group. I sent one on the US, I sent 2 actually. I sent 2, yeah, it's basically 2 trades on the 30 for 20, and I sent 1 trade, like 3 trades on the signals group. The 2 trades I sent on the 30 for 20 both hit stops. And the 3 trades I sent on the VIP signals, all 3 of them hit stops. And one of the guys on the group said, "Yo, today's been a stop loss day. What? They never say. By the way, they never say this when it's a take profit day. They will never say today has been a take profit day, because sometimes you send 10 trades, all of them go to take profit on the same day. By the way, so I sent 3 trades and I was like, okay, no, I need to rest. Something is not going well with how I'm trading or how I'm looking at the markets today or whatever. I need to go back and look at myself and understand why am I hitting stop loss so much, because this is not something I'm used to. So another like one of our subscribers said, "Oh, today it's been a stop loss day," and I said to my response to that was, "It's part of the trading description, buddy. It's part of the job. There's no ways you will not hit stop losses, whether you like it or not. There's no ways." So the reason why people then worry so much when stop losses are hit is because someone will risk money they are not willing to lose. Someone will risk the whole account because they see you risking the whole account. But the idea and the mindset behind me risking that amount is because I funded money I'm willing to lose. So whether I fund 15,000 and you see me using 0.20s, if you see me using 0.20s, like I put 3020s on that thing, that doesn't mean like I don't know what I'm doing or like my risk is messed up, because people always feel opinionated. They feel opinionated. They feel the edge to speak about your trading. So people will say, yes, this guy doesn't know how to trade. How can he risk the whole account like this? For me, the money I put in the account is the money I'm willing to lose. And if I know that if the market pulls back to this area and I'm still there, then you have a smaller echo. I don't know what that means, but anyways, if I put in that amount, 15,000, and I fund it, I will calculate how much of drawdown can I withstand with the amount of lots I'm using, and is the drawdown still within my structure, or the drawdown will kill me even when it's within structure and then go. So those are things I calculate before I take a trade. So whatever money I fund, whatever amount I fund that money knowing that I'm willing to lose. We hear you loud and clear. Okay, sharp. You fund amounts you are willing to lose. So you cannot fund an amount you are not willing to lose, especially on US states and NASDAQ. So when you fund that amount knowing very well that I'm gonna deposit 15,000, and this 15,000, if it goes, I'm gonna make over 80,000. But if I lose, I'm losing 15,000. Let me do this. AirPods Pro. Let me disconnect them. So you are funding money you are willing to lose. So you are not just funding. So the same mindset I had on currencies is the same, but different implementation and different execution. So the execution will be different. I will not be funding amounts I'm not willing to lose. So what I'm funding is what I'm risking. I'm still using the same mindset. It's just that the whole amount is in my bank account. Like if I'm willing to lose 100,000 on that day, then I'll be funding, I'll be risking, maybe, let's say if I'm planning on funding 100K, I will not fund 100K. I will divide the 100,000 to however the amount of trades I'm going to be taking that day. If I'm taking 3 trades or 4 trades, I'll be dividing it to 4 times, 25, 25, 25, 25. If I fund the first 25 and it makes me money, then that's a winning day. But if the first 25 hits stop loss, which my stop loss will be a blown account, then I still have 75,000 more to trade. So for someone else, they'll think, oh, he blew his account. But for me, my account hasn't blown because I still have 75,000 more to risk on this trade that I'm trading, you see. So people need to understand these things, that the fact that you funded big doesn't mean that that's the last amount you are funding or whatever, or you're funding big, you're risking the whole amount, so that's the whole amount you're not willing to lose or whatever. It's amounts you are willing to lose. So these are things that we must get used to as we are trading. That's the first winner's mindset. And if you make money, always withdraw. Like once you withdraw that money, it comes into your bank account. You see the money grow, you see the money, accumulate. That really motivates you to doing better. That really motivates you to being a better person and to actually doing better things. So it's always important to see money come into your account, because on losing days, the money that came into your account will give you the confidence to know that you know what you are doing and you're not taking chances, which is one thing that people don't know. That it's not that we are better than everyone that's trading. The fact that we are still trading and we are good today, it's not because we are better than the people that blow accounts. The only difference between us and them is that our money is tangible. So it's tangible money.